Hey guys, it's Dave with another deal day where each week we look at a new property in a new market. We do this because it helps build repetition, discover new markets, and become better investors. This week, we're gonna look at Memphis, Tennessee. But before we go on, I wanna thank all of my viewers that have been liking, they've been subscribing to the channel. It's been helping us grow, and it means the world to me. Our purpose here is to help normal people build wealth and invest in real estate. So thank you for helping our channel grow to help do that. Okay, let's look at the overall market to see if it's growing, shrinking, or indifferent before we look at the specific asset or property. Memphis, Tennessee has a population of 621,000 people, and last year it decreased by 1.51%. But if you look over the graph, it looks like it's been stable for a while. So this is not an alarming thing. Job growth is 1.4%, which is okay. Unemployment's 5.3%, which is a little above national average. Average salaries are $62,000, which is actually pretty high. And the median sales price of properties is $170,000. It's minus 15% year over year. So it's definitely taken a hit. And this is probably because of the small population decline and the rise in interest rates up to 8.5%. Unfortunately, they're getting squeezed a little bit on both ends. The property that we're actually going to look at today is 3096 Ridgeway Road in Memphis, Tennessee. So looking at the Google Street View test, the only thing that sticks out is that it's on a main road, which I don't love, but it's not the end of the world. I mean, it's not like it's on 95, but it is on a big road. That's the only thing that sticks out. Everything else, single family homes, sidewalks, they look nice. Homes are kept up. I'm going to give it a pass, but I would say that you want to adjust the value because it's on a main road down a little bit. So you don't want to be comping it out with properties that look the exact same, but they're tucked back in the neighborhood because this is going to be a less desirable property. Let's move on and look at the listing details. This property is listed for $160,000. It's a 4-bedroom, 2-bathroom. It's a single family home. You can see that it is a big ball of beige from the property. The home was built in 1980, so it's a relatively newer house. It's not terrible. It's 40 years old, but I mean, compared to some of the markets that are in 1900 builds, this is newer. My rehab suggestion is looking at the roof on there. It looks like you're probably going to have to replace it. So I'd budget to just have to replace the entire roof and just do it now so you can know that, hey, 25 years into the future, I'm going to be fine. I'd also install a nice porch light, a nice number on the mailbox. Going inside the house, I put LVP in the bathrooms and the main area. I mean, if you wanted to go a little bit cheaper on your budget, you could do carpet in the bedrooms and carpet in the main, but I'd still do LVP in the bathrooms. And the reason that I do LVP normally everywhere is it just lasts a lot longer than carpet. So you can have a couple turnovers and still not have to change it out. Carpet, often if you have bad tenants, you have to change it right out again. Moving on into the kitchen, I'd change out the appliances. So it's all stainless steel appliances in the kitchen. I'd also put in nice granite countertops and really give the kitchen a good look. I think you can keep the cabinets there. I'd change out the fans and the lights so everything looks the same. I'd put a bunch of nipple lights in throughout, brush nickel, maybe keep a nice fan in the main living area. Nothing crazy here, except when you get to the bathrooms and you go, holy smokes, look at these lights. They got like little chandeliers. Tell me what you guys think of the bathroom lights in the comments. I think they're pretty crazy. I personally would change them out. I think they are very unique. You don't want unique in your property. However, I do happen to not mind the master bathroom countertop. Even though it looks a little bit crazy, I'd keep it. I actually think it looks kind of cool. It might come back in style. It doesn't look that bad, but I think you gotta change out the light fixtures. But let me know what you guys think. And let me know if you guys would also keep the grandfather clock. I probably would. I'd probably leave it in the property, and if the tenant didn't want it, I'd tell them to throw it in the trash. Or I'd just have my guys come pick it up and trash it. So rehab budget on this one, I'd estimate for about $40,000. Probably 12 to 15 is gonna go to your roof, and the other 25 is going to go to the interior of the house. And this is going to be at about $25 a square foot. And I always like to break it down to square foot because if you try to do each individual little thing and price out, it just takes a really long time. So this helps us simplify how much we're probably going to spend on the budget. So moving on to the analyzer. Zillow estimates the rents to be around $16.45, but I'm looking at a bunch of comps and I don't agree with Zillow's estimate. I'd probably lower it down $100 to be a little bit more conservative, maybe even more than that. But we'll say $15.45, we'll be able to rent it out each month. Comps are between $150 for a house in the same condition. So I think it's selling for right about the right price, but they go up to $250 if they're in really nice condition. So I'd say you're right on the money there for that list price. You're probably not going to get a ton off. Property taxes are $1,356. So not terrible. Looking at the cash flow of this property, it cash flows about $1,177 if you pay all cash, or 6.73% cash on cash return. Not the worst thing in the world, not amazing, just okay. If you leverage the property, unfortunately, at the 8.5% interest rate, you're losing $51 a month or 1.18%. So we don't like to purchase properties that we lose money. I don't recommend anybody else purchasing properties that they lose money on. So what can we do here? There's a couple options. You can put a higher down payment. You can offer less. If you end up offering $135 on this property and maybe you put on a bigger down payment, so at $135, the property actually cash flows even when it's levered. And then if you were to refi it, and I never want you to speculate down the road, but let's say you refi it later down in a couple of years at 6.5%, your cash on cash return is then $331 with a mortgage. So that is not bad. I'm going to go ahead and bless the property. If you buy it and maybe you get a lower price, that $135, maybe just put a really big down payment on it, I'll go ahead and bless it. I think it will be a good long-term rental. I think it will appreciate over time. It's in a decent area. So the end verdict, we're going to go thumbs up on the market. And we're going to go thumbs up on the property. So this is a thumbs up, thumbs up. We don't have a ton of these. If you guys find this content valuable, we'd really appreciate if you give the video a thumbs up, if you subscribe to the channel. Again, we really appreciate you guys doing that because it's been helping us grow. We look forward to helping you purchase your first rental property and build wealth and build financial freedom. So I'll see you guys on another deal day.